Welcome to Trading Lounge and the European indices for Friday, February the 18th, and starting with the DAX on the daily chart here. So I'm not an expert or up to date on what's happening with the issue on the Eastern Bloc, and obviously anything can happen at that point. But let's go over and just look at what we've got here. So on the weekly chart for the DAX, the 38.2% retracement level from the low of wave 2 to the top of wave 3 here brings it down at 14,400 roughly in that space there. So it's possible for this market to drop down lower in that case. Obviously we've got really good support here. We're not really seeing nice impulse waves to the upside. So obviously we're in a very complicated corrective pattern here. How to best count this and what to do about it, it's a bit of a tricky one, I have to say. But obviously if Russia pulls back, well then the market's going to pop and start to tune in with the US stocks, US banks and Apple and those sorts of things. So really it's a question of buying new highs still, but also being open to any downside at this point as well. So just on the daily chart here, or 2-day chart, we've been looking at two patterns here in terms of sort of a larger triangle pattern here. And sure, I know it can be counted in different ways as well, but looking at it as an A wave, a B wave here, a C, a D and an E wave here for this. So that's possible at that point to have a low in place here, and we can look at this as wave 1 to the upside and back for wave 2. That would sort of be in line with the US markets, but you know, obviously there's different things occurring. So we could also look at wave D over here as well. Now if it was wave D over here, it'd still need to have a little bit of, because we'd have to look at this as almost like a triangle pattern within itself here, to a point of an A and a B and a C and a D and an E wave here to come back up for the D. So we'd still need to see another move up here for this at least to go on play here. You know, so yeah, it's sort of which way to sort of look at this. There's another way I can look at this as well. There's probably, everybody's probably got their own way of looking at it as well. So we've also been looking at it at this way as well. Now it's a bit of a long shot, but I kind of like it. With wave B up here with 1 and 2 and 3 here, and then well, we can configure this in a couple of different ways here as an A and a B and a C here for wave 4, and then down for wave 5 coming in here. So we've had it like that as well, also being mindful of the 14,000 well, 400 in this case, but the 14,500 would be a nice move for this. But obviously there's lots of support here. Will it hold? Will Russia move in on the Ukraine? I don't know these things, but what I do know is that this is a corrective pattern here, and at some point when it's finished we'll be going to the upside, and that's what I've been trying to look for, but it's difficult to do that. But certainly buying new highs would be a way forward. In terms of the intraday moves, let's go in and have a bit of a look at this. This is one way to look at the markets and also be in line with the US markets. So look, it's possible, but squeezing 5 waves into this here is pushing it a little bit, but it's doable. But is that right? I don't know, but let's just assume that it is for a moment, that we do have 5 waves up there. I think the thing is, if Russia do pull back and the market pops, well then anything above here would be you know, would be a move to the upside. But at the same time, we really need to be mindful that the market can come lower into that 14,500 sort of area there and see a sharp drop in this market. So yeah, I'm afraid I'm not much sort of help with all of this, and this will be the same for STOXX 50 as well. Now, just on the intraday here, and from the low here, it's possible to count. It's possible to, I mean, I look at it straight up and I think of an A and a B wave and a C wave up here, but I know that we can look at it as 1 and 2 here, and then 1, 2, 3, 4, 5 for the third wave, and the fourth wave here, and the fifth wave here. It's not like this is looking like down as an impulse wave. Yes, we can count it down as an impulse wave, and the way to do that would be wave 1 here and wave 2 here, and then we would need to look at this here as wave 1 here and wave 2 coming into play here, and moving down for wave 3, 1, 2, 3, 4, 5 for wave 3 here. A little bit short, we may have to go down for wave 1 again, but wave 4 here, just the same. And then a wave 5 to move down here further, but it's not counting very well because wave 4 is going to overlap wave 1 here, you know. So, and I do have 5 waves in here, and I can count that as an A and a B and a C back up through to here, and can count that as 5 waves. So we could count this down here also as wave 1 here, and then back for wave 2 here for this. So there's a few variations. So going long above this high here, I mean, we'd normally go up here and then down to this one, and we could take it down to this one here. So above the 41.70, 47 sort of area up there, we can look at being on the long side, but otherwise we have to look at, you know, there's still scope for this to move down. Now it's in the box here, the 50, 60%. So between the box, you know, and the 4100 here, it's a nice sort of sticking area to play here. But I guess in the short term, just to sort of, you know, consider this 100 level here, and you know, just to give it a bit of time to see if it becomes the support or the resistance at that stage. You know, that would be sort of a step forward on that. But yeah, so I mean, buy new highs or just allow it to be here, I reckon, and let's see what comes out of the box. On the FTSE here, also looking at different counters, 1 and 2 here, and also 1 and 2 here. So yesterday we were looking for an A and a B and a C back down through to here. Once again, will this drop straight through here and you know, and move lower? You know, it's a bit rough calling this 1, 2, 3, 4 here, and then 1, 2, 3, 4, 5 up here, because wave 4 overlaps wave 1. So kind of counts as a corrective wave up here if you had to count it, you know, because of the overlapping wave structures. So an A wave and a B wave and a C wave much deeper here. But all I can say, if Russia does pull back, then, you know, taking out the last highs of any trend would be the way forward at that point. Obviously, you know, if the news breaks, you can, you know, start pushing buttons and things. But, you know, if they do invade, well, then it's going to drop quite sharply. And, you know, we can look at that as 1 and 2 back here quite easily, and look at further downside on this quite sharply, because we'd be looking at wave 3s to the downside at that point. You know, the market would move down fast at that point. So looking at this as an impulse wave here is kind of a long shot, I have to say. But, you know, I'm kind of basing the global markets off what I'm looking with US banks and Apple and Amazon and those sorts of stocks. So as a template, but is that right? Is, you know, what is, you know, I mean, if Russia do invade, it's going to be over in, you know, sort of minutes, and the US will be sitting there scratching their head, I guess. You know, I mean, they're not, NATO's not moving in, are they, as far as I know? So it'll just be another situation of, you know, Bosnia and Crimea, you know, years ago, that kind of thing, you know. You know, Putin's playing poker, and, you know, so... yeah, I don't know. That's it, I guess. I don't know. In this, I don't know where we're going to go, but all I can say is buy new highs, but otherwise just be mindful for new lows. When it comes to the euro here, obviously this is involved in it as well. I mean, but, you know, I mean, even Putin's been moving away from the trading trading in US dollars, hasn't he? He's been sort of using the euro more to sell energy. But we were looking at wave A up here. We were looking for wave B to come back. It's pulled into its box here. It's possible that wave B's over here, but that doesn't sort of look the case now. Because, I mean, I counted up here as 1, 2, 3, 4, 5 for the A wave, the B wave, 1, 2, 3, 4, 5 for the 6. So I've only got 3 waves up to that point, but I have to say that, I mean, I could look at this as 5 waves down here. It will just be all of this is down for 1, ABC for 2 here, down for the 3rd wave, or even the 3rd wave from 1, 2, and 3, 4, 5 for this one here, and 4, 5. So it can be counted as an impulse wave to the downside. It's consolidation here. Once again, I can kind of see a bit of an impulse wave here, a corrective wave here. Maybe we're in a triangle. That's why I'm thinking here as well, is just to buy new highs if you if you had to trade it. And of course, you can bring that down, down lower into these. Wouldn't go too low at this point. You want to make a clear break at that point, but. There is a case for that being sort of bullish there. I mean, we are expecting it to go up to wave C here. I just didn't know if that was it as an A and a B and a C here for that and finished and done. It's not like I've got a beautiful impulse wave up here, so that's why I was looking, well, it could be just an A wave to here, B wave to here, and a C wave for the B wave here. So once again, I'm not really too sure here as well, and anything could happen at this point. So I just think we need to chill and not really be involved in it unless we start see things move at this point. Alrighty, I'll have to leave it at that. Thanks. Cheers.